Today, we're breaking down something that a lot of investors have been talking about lately: YieldMax versus Roundhill. These two ETF issuers keep popping up in conversations, especially when people look for income-focused or thematic ETF. And even though they both offer unique strategies, the way they build their ETF is completely different. So if you've ever wondered what separates YieldMax from Roundhill, or which one might fit different types of investors, this video is going to explain everything in a simple and easy to understand way. Let's start with YieldMax because they've been getting a lot of attention. It is known for one thing: option income ETF built around individual stocks. They design ETF that focus on a single company, and then they use option strategies to generate income from that stock's volatility. It's a very specific approach, and it appeals to people who want to collect steady income instead of relying on traditional dividends. The interesting thing about YieldMax is that they're not trying to track the stock itself. They're not aiming for long-term growth. Their goal is to take a stock that moves a lot, use the movement to collect option premiums, and pass that income to investors. This is why their ETF often behave differently than the individual companies they're built around. When a stock shoots up, YieldMax ETF don't follow it fully because the strategy caps the upside in exchange for generating income. And when the stock drops, the premiums help soften the impact, but they don't completely prevent price decline. It's a unique trade-off. You can think of YieldMax like a machine that turns volatility into income. It's not about the stock going to the moon, it's about the stock moving, because movement produces option premiums. The more the stock swings, the more opportunities they have to generate income. That's the formula they focus on. Now let's look at Roundhill. It takes a totally different approach. While YieldMax builds single stock income funds, Roundhill focuses on themes. Not random themes, but big ones. The kind of themes that people believe will shape the future. Think artificial intelligence, sports betting, streaming, social media, and even weekly paying income ETF. They build products that capture long-term trends rather than just movement in a single stock. Roundhill is also known for being creative. They're one of the issuers that bring new types of ETF into the market. When an investing trend starts getting attention, Roundhill is often one of the first companies to offer an ETF around it. They focus on making these ideas accessible, so instead of buying many separate companies, you can hold one ETF that covers the entire theme. This is why I say YieldMax and Roundhill barely overlap. YieldMax focuses on generating income from volatility. Roundhill focuses on giving exposure to future-focused ideas. One is income-driven. The other is growth and theme-driven. One uses options as the core engine. The other invests directly in companies linked to a particular industry, trend, or innovation. Another big difference is how investors use these ETF. People usually buy YieldMax ETF because they want income. They're looking for frequent payouts, and they understand that the fund gives up some growth potential in exchange for that income. But when people buy Roundhill ETF, it's usually because they want exposure to a trend they believe in. Maybe they think artificial intelligence is growing. Maybe they want exposure to future mobility. Maybe they like the idea of a weekly income product. It's about the theme, not the payouts. Now let's talk about how these two companies handle risk because their strategies naturally create different risk profiles. Option income ETF, like the ones YieldMax creates, come with trade-offs. The income potential is high, but these ETF are not designed to grow in value. Over time, the share price naturally drifts lower because of how the strategy works. That's not a flaw, it's just part of the design. YieldMax is transparent about this. Their ETFs are meant for income collectors who understand this dynamic. Roundhill ETF don't have this built-in downside pressure because they invest directly in baskets of companies. But their risk depends on the theme itself. If the theme is strong, the ETF can grow. If the theme temporarily falls out of favor, the ETF can drop. So the risk comes from the broader trend, not from an options mechanism. When you compare the two, it becomes clear that investors choose YieldMax for income and Roundhill for long-term exposure to a big idea. These are two completely different reasons to invest, and understanding this difference helps viewers make sense of why the ETF behave the way they do. Now let's talk about investor expectations because this plays a big role. Sometimes people get into YieldMax ETF expecting them to behave like the stock they're based on. When the stock goes up, they assume the ETF should go up just as much. But once you understand the option income strategy, it becomes obvious why that doesn't happen. YieldMax cap the upside to generate income. So they won't fully follow big rallies. That's not a problem. It's intentional. Roundhill ETF, on the other hand, follow a theme. So if the entire theme goes up, or if the companies within that theme perform well, the ETF rises too. It behaves more like a traditional ETF because it holds actual shares of multiple companies rather than option positions. That's why Roundhill can sometimes see strong long-term performance, depending on the trend they're tied to. Something else worth mentioning is how these ETF fit into a portfolio. YieldMax ETF are often used as income supplements. Investors add them alongside their normal investments to create more frequent payouts. Roundhill ETF are used as long-term growth or thematic exposure. So when someone says they're comparing YieldMax to Roundhill, it's almost like comparing a fruit tree to a vegetable garden. They serve different purposes, and many investors even use both. Now let's talk about the attention both companies have been getting lately. YieldMax gets exposure because their income-focused ETFs always spark curiosity. People love hearing about income strategies even if they understand the risks. Roundhill gets exposure because they innovate. Their weekly income ETF launch, for example, created a lot of buzz simply because it was something new. As more investors learn about both issuers, the conversation naturally becomes, which one is better? And the answer is simple. It depends on what you want. If your priority is income, especially frequent payouts, YieldMax is built for that. If your priority is exposure to major future trends and long-term ideas, Roundhill is built for that. Neither one is better. They are just different tools for different goals. To wrap this up, YieldMax and Roundhill are two of the most talked about ETF issuers right now, but for very different reasons. YieldMax focuses on generating income through option strategies built on single stocks. Roundhill focuses on creating thematic ETF that aim to capture long-term trends and innovations. One is about volatility and income. The other is about growth and future themes. If you understand what each company is trying to achieve, it becomes much easier to know which ETFs fit what kind of portfolio. And that's the whole point, using the right tools based on your goals. If you found this breakdown helpful, make sure you hit the like button, subscribe to Money Stick Unfiltered, and drop a comment telling me which ETF you want me to cover next. Thanks for watching, and I'll see you in the next video.